We are back at it again here with another video with the Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. Here we are with the SPY, the S&P 500 index, continuing with the volatility here, rejecting again at 390 and coming back down and struggling to hold 385. And today within the volatility, our SPY bot sent out a bear indicator since 9:40 a.m. From that moment forward, as you see there in the chart, outflows crossed the midpoint to the downside, further weakness on 42 vision, and put options went up 200% plus within an hour, guys. If you guys want to receive this clarity and edge of the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicator, getting connected over to the bots, and becoming part of a growing community of investors, all looking to learn and grow together by using these resources to maximize in either direction, whether stocks are going up or going down. So here we are with the SPY, trying to find support here at around 384, 383 area. We've talked about how pivotal it was to stay above 385. We're going to break it all down in today's video, why the market is moving this way, and what data came out today that created this stir up. But before we break it all down, I want to share with you guys the home run opportunities that were mentioned this morning over at the Discord. So the home run of the day was spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market and receive this edge and clarity of the charts, check out the link down below in the description to the Discord. And by joining, you'll become part of our growing community of investors, all looking to learn and grow together. So one of our home runs was from our Tesla bot. It sent out a bear indicator at 9:55 a.m. From that moment forward, the outflows crossed the midpoint to the downside, further weakness on 42 vision, and put options went up 300% plus within an hour, guys. And our other home run was ARAV. We caught this one in the pre-market, pulling downwards towards the bell as you see there in the chart. Inflow stayed above the midpoint, got that bull indicator, and within minutes it jumped up 30% plus, pulled back down, and went for a second 30% plus move within minutes to an hour. If you guys want to know about these stocks early on in the pre-market and receive this edge and clarity of the charts, once again, check out that link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. Let's jump into these charts. So here we are with the SPY, the S&P 500 index, continuing to range here between the 380s and the 390 area, and it continues to reject up here. We have a double top here forming. Is it either going to be the real rejection or going to be retested and broken out of? That's the big question mark here. But what made the stock market fall so fast today? Well, right now we have the FOMC meeting that started today, creating that stir up of uncertainty, right? And then also we have the official meeting and the rate hike that's going to be released tomorrow. But today there was data that came out as well, which went ahead and stirred up the volatility today. And here you have it popping up on the screen, and it was PMI data and JOLTS data. And these are data points right now being used by the markets to see how the Fed will probably react. Because remember, the Fed is being data driven. JOLTS data came in higher than expected, and PMI came in higher than expected, which both show that there is not a slowdown in the economy just yet, and that their policies have not actually trickled into the economy, which means or implies that the Fed might have to be more aggressive than necessary, and that's why we got that big reaction today. It's all speculation right now. We will know depending on the tone that the Fed has tomorrow. So I'm going to pull up the bull and bear indicators in the inflow versus outflow, which you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected over to the bots, as well as becoming part of a growing community of investors, all looking to learn and grow together by using these resources to maximize in either direction, whether stocks are going up or going down. And in today's video, I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. So here we are on the 30-minute chart with a bear indicator, canceling the bull indicator from today in the pre-market as inflows try to pick up from yesterday in the after hours, crossed into today, and right at the bell, it switched from green to red, got that bear indicator, full transition here into red of weakness on 42 vision, from the rip area. And here you have it, the outflows dominating again. This is going to be crucial going into tomorrow how to react, because it fought all day today at that support of 385 and rejected. It double topped here at 390, and right now it's fighting to try to hold itself above 383. And if that gets broken through, the next support is down here towards 378 and then down here towards 375. I've talked about this in my previous videos, and I'm going to be watching how these inflows versus outflows react going into tomorrow, because if they cross back up and they have full strength like what happened here on October 28th, things could get moving really quickly, especially if that bull indicator pops up. Now, if it stays below the midpoint within the volatility and that bear indicator does not get canceled and it stays dominating over the chart, well then things may continue to go weaker, and we need to watch these support levels very carefully, and not just on the 30-minute, but also here on the 15-minute, how it also tries to come back up. And every single time those inflows cross, they are very short-lived and quickly get canceled with a bear indicator and outflows dominating again. And I'm going to be watching that here within the volatility going into tomorrow. That's going to be crucial, and those are the key things to watch here. So on the 15-minute, we want these inflows to pick up. We want this bear indicator to get canceled. And on the 30-minute, I'm going to be watching for the same thing. And the most important one right now in the bigger picture has crossed since yesterday, and that's the 1 hour here. I broke that down in yesterday's video. We wanted to see this cross back up, and it has stayed below. So this movement here, you could see it was a fake out resistance, right? You could see that there as well. And within the volatility, it was a rip area, right, which is bright green. What comes after that? The transitions back down on 42 vision, followed by that bear indicator. And on top of that, the outflows were dominating. So any move up, if this did not bring itself back up or even try to cross the midpoint and it stayed red and below as it is, and it pulled further away than yesterday. Yesterday, the outflows were 0.34. And today, they have pulled down to 3.19, negative 3.19. And I talked about how it had room to go even further down based off the history of the chart. Because in the last two outflows that pulled downwards, it went all the way down towards negative 5.2. So something to keep in mind here. It still has room to go even further. And we have those support levels to watch in either direction. Now, I have stated this in my previous videos. If it's your first time coming across the channel, you definitely want to be aware of this, because this is where the price targets are coming from a lot of analysis price targets. Right now, we're hearing people talk about 4,100 towards the end of the year. Other people are talking about we won't see a bottom until we hit 3,000. Let's break it down here with these lagging indicators. So here we have pulled up the lagging indicators, the blue and purple lines with 42 vision, the bull and bear indicators. And you can see here when these bull indicators pop up way in advance from the crossover. Same thing here with the bear indicator here to the downside. And same thing with the most recent bull indicator, and the crossover hasn't happened just yet. Way in advance from when it happens. So let's talk about what's going on here and how these lagging indicators are being used within the volatility. And you could see it here on the 1 week chart as well. Our bear indicator popped up since way back here in January, and the crossover didn't happen until this second bear indicator here in September. So a lot of people that waited for that crossover waited months without making a move. So a lot of people like using this more for analysis, not really within the volatility. That's why they're lagging indicators. But for the most part, every single time the purple line has been hit during corrections, there's been a bounce back. Now, capitulation or something like a bottom, as they call it, has happened when the blue line gets crossed or the blue line gets touched, right? You could see here in the history of the chart when it's actually crossed, and the bear indicators popped up a whole year in advance before the crossover. But when those crossovers happen, a bottom is pretty close, right? A few months around that time. But let's talk about where it is that these analysis price targets are coming from. And interesting enough, it's the same analysis rating, right? We have the one here that's the most recent from yesterday. The SP 500 can get to 4,150, before reality sets in. Morgan Stanley's normally bearish top strategist, right? And it's the same person. They go ahead and quote him here, Wilson, right? Stating that right now things could run up and it has the possibility to have legs to 4,000 to 4,150 before coming back down, and 2023 EPS estimates have to be cooled off as well. They continue to remain a little high. Then we also have this type of news coming out here. This is very interesting. This is just speculation right now, that energy stocks could make up for 30% of the S&P 500 by 2025, a massive increase from 2% in 2020 that will come at the expense of tech. And that's why tech stocks right now are also getting hurt during this environment, because it's not just right now the market's falling or inflation or the Fed rate hikes. There seems to be a huge shift of portfolio allocation, guys, that is going on among large investors, and I found that interesting. Now the other side, right, and it's the same person, Wilson, stating that apart from all of this, the S&P 500 has room to fall and could bottom between 3,000 and 3,200, according to Morgan Stanley's Mike Wilson. Mike Wilson is stating we could go all the way down, is stating we could go all the way up. I mean, that is very interesting that this person is coming out of the way to go ahead and state this, but I think they're basically stating that this is more of like a bear market rally before going towards their initial price target of 3,000 to 3,200. Where is that coming from? Well, in my opinion, it's coming from the lagging indicators here, and you could see it, right? You got the light blue line at 308 and you got the purple line at 401. These lines have been used historically. They're lagging. They're usually more for technical analysis. And when the purple line has been bounced off of, it's been during a correction. When the blue line has been touched, it has been capitulation or a slight bottom. And here we are in the middle of it all. And this is where these numbers come from, right? 308, 401, that's anywhere between 3,000 and 3,200 on the light blue line, and anywhere between on the purple line of 4,000 to 4,150. I look forward to seeing your thoughts down below. Where do you think we're heading? And as I stated earlier in the video, 390 is a huge resistance level that definitely needs to be broken through by the bulls to hit newer highs. And to the downside, 375 is going to be a pivotal support at the lower extreme. In between that, 380 will be just as crucial. As always, guys, thank you guys so much for watching, and let's make some money.